The following program is paid for and presented by John DeMasi. The opinions expressed are not those of Town Square Media or station advertisers.
Now, WPG Talk Radio 95.5 brings you a very special show. It's The Heart of Your Money, featuring a variety of information to help you and your family improve your financial situation. The financial expert on today's and every show is Joe Yakovich from JML Financial. Now, with Joe Yakovich, here's John DeMasi.
Good morning and welcome to another edition of The Heart of Your Money right here on WPG Talk Radio 95.5 FM and also 1450 AM. Good to have you with us and good to see Joe Yakovich, who can't pitch tonight because, in case you're wondering...
Age is catching up to me, John.
I tell you, I mean, if it's not the knee, it's the leg. Your arm, your shoulder.
We have a rotator problem, and anybody that knows rotator cuff surgery is not fun. So I had it done a ton of years ago, and telling me to rehab back, it's maybe it didn't work. You know.
Oh, well,
Crazy.
Well, whatever. We are here, and we're ready to talk to you at 609-407-1450, 609-407-1450, the heart of your money, every Saturday, 8 till 9, right here, WPG Talk Radio 95.5. And we should mention that Joe is a prolific author, and he's got a couple of books for you, Wealth Beyond Taxes, Bulletproof Your Financial Plan, and The Heart of Your Money. All of those are available to you. All you have to do is call the radio station here and leave your name and number. Joe's office will contact you, and you get the books free of charge. What else do you do, Joe? I mean, author.
Well, I got something coming up for everybody to be informed about. I'm doing a virtual workshop on November the 10th and the 15th. So for those of you that we're going to be talking about RMD planning, required minimum distribution. We had a show on it, but we'll be doing about a 45 to an hour presentation virtually all over the country. We're going to hope that some of the New Jerseyans will be attracted to this. We had a pretty decent turnout the last couple we've done, and they're going to be on November the 10th and the 15th, and we should have 100 or so people on the show.
Oh, that sounds interesting.
Yeah.
Required minimum distribution is what, though? Could you just refresh our memory?
Right. That is when you're mandatory to take your money from your qualified plans, 401k IRAs and so forth, and 403bs. You are required. It used to be 70. They changed it to 72. So at 72, you must withdraw dollars from your qualified plan, being your IRAs. And what happens is that time you'll be then taxed because you've been deferring it for all these years and never pay any tax on that money. So at that time we're going to be doing a presentation specifically about how to do that and not to miss that 72-year date, because if you do, it's the penalty is 50%.
Yeah.
So it is really crucial for people to understand that, and we're going to be doing a virtual workshop on that on those two dates.
Don't miss that date, because 50%, that's a lot of that's a lot of change.
You know, and they moved that from 70 to 72. There are actually some talk about possibly increasing to 73 to 75, but right now it's 72. And you have to take it. We help people do that, and that's important for them to know that, because again, when we were talking about last week, we'll address some of the things with my guest speakers on last week about most of us have been postponing this inevitable situation, and now it's going to catch up to all of us.
Well, and if it does, boy, that's a big hurt.
Well, if you notice what he said, and for those of you that were not listening to the show last week, and him and I are good buddies from Milwaukee, Wisconsin, how much, if you think about it, John, with the president and the Fed, Jay Powell, you would think those two individuals probably have access to the smartest people
Yes.
in the country. Agreed?
Yes.
Maybe in the world, quite frankly. And you would have thought, thinking of what we think out here, the public, what is happening with inflation. We haven't seen these things happen, for 30, 40 years. And if they can't get it and put it, in the right direction for the country, when people sit down with me, what do they think? Because I know no more than Jay Powell or the President of the United States. I mean, the only thing I do know is that you need to have a game plan walking into to see someone like myself. You need to have a good plan of action. And for those of you that do not plan and are do-it-yourselfers, good luck, because you're going to need all the help you can.
Yes, you are.
Because of all the, and I started to realize what he said last week, John, because there's so many moving targets that are happening here. The changes, like we talked about, from 70 to 72, you need to be aware of that. The things that are happening with the market, being how volatile it is right now, the things with inflation, and he said a point, and I remember this, and we all, I think, would have been in agreement with, and from 73 to 91, inflation was anything over 5% or more, and we've seen some 10 double-digit inflation numbers and interest rate numbers. So is that going to happen again? I believe so. I hate to say that because I thought by now they would have some type of game plan working to start to think about or look at how inflation will start to fall back, but it doesn't seem that way. You're seeing the big numbers out there. You're seeing different layoffs in labor's cost and labor itself. But what's going to happen, all I'm explaining to people, and I use things that are publicly out there for people to look at. I use wage statistics that tell me specifically every October 15th, the middle of the month, what incomes are versus how much we pay in taxes.
Yeah.
So when you start to add both of them up, it doesn't. The math and science don't jive.
Yeah.
And the people that have money, they have big targets on their back because they're going to come after those people. And they're going to come after them hard because there's no money to be found. They can only print so much. They can only do their best for what they have. So when people ask me, well, what do you think? What do you think? I don't know anything more than those people do. All I need folks to understand is the good questions I ask, because every person I talk to, John, every single one, it's different. It's different. It's completely different.
Yeah.
And it's not a cookie-cutter approach when you're dealing with people. You have to understand it's the questions, what's important for that person, where are they, what are they trying to accomplish, what type of risks are they willing to take, do they have IRAs, do they have 401ks, do they have Roth IRAs, and that's what I've been talking to people, I don't know, for the last half a dozen years, if not more, this conversion thing, converting from an IRA to a Roth IRA, because there's a window of opportunity here.
Yes.
And that's the real caveat here. If they don't understand that, because taxes, they have to go up. It's not a question, well, maybe, what do you think? And there's no, the bet is that most people, a lot of people right now, not most, but a lot of people do not pay taxes. And they're still putting money away. Now, the standard deduction was increased this coming year, 2023. But at the end of the day, where are we getting the money to do all these things? You can only print so much, and you can only have this inflation for so long, and it's disturbing the middle class. I mean, it really is destroying the middle class, what we have it to be.
It is the Heart of Your Money every Saturday, 8 till 9, right here on WPG Talk Radio 95.5. Joe Yakovich is here. Joe is JML Financial, his website, jmlfinancialgroup.com. And, of course, we're here to talk to you. And if you've got some questions, 609-407-1450, 609-407-1450, the Heart of Your Money, every Saturday, 8 till 9, right here on WPG Talk Radio 95.5. I know that you wanted to kind of go over what your guest said last week. His name is Van Miller, for those who weren't listening, but I was impressed with what he had to say, and I came away, and I think you did too, he just kept saying, I can't see how people can do this on their own.
That's the point, John.
That's really what I got out of that.
I mean, and I'm doing work, and that's what's so great about my profession and how I've set myself up because of, and not because of COVID, but if you think about it, I'm able to do what I do anywhere in the world, quite frankly. So, what he was saying, and I'll really dig down, the numbers match up to what we're talking about. People have to make, decisions that they do not want to make. And the things that really disturbs Van and myself, because they actually think the things that they were doing for the last 20 or 30 years, they're expecting those things to continue to work. That's not so. So what Van and I always, and him more than ever, because he is really the epitome in our business, and not everyone in my business knows who he is. But if you do not plan correctly, I don't care who it is, if you must sit down with someone to put a game plan together, not just present products to that individual or couple, you really have to ask the tough questions of the couple. And these are questions that will kind of dig up some things that sometimes are uncomfortable because each couple is a little different. But the point I'm making, and the point that Van was making, and he used to say it to me all the time, there's no such thing as good news or bad news. And when I heard that for the first time, I had to scratch my head. Then I sat back and I said, he's right. Because what good is for someone could be bad for someone else, and just the opposite. So when you see bad news, that might be a benefit to that individual. It might be possibly selling put options against the portfolio, assuming it's a portfolio of money. But the point I'm making here is you really have to sit down with someone to plan. I mean, really sit down and say, listen, this is what we need to do. This is how we're going to do it. And let me ask you a few questions. How do you feel about that? Because people have this mindset of listening to their uncle or their brother or, or their plumber or their, electric. It's kind of funny when I hear this, but, from what I get, John, and gathered from wage statistics, and I use that as much as I can, it just makes you think, like, wow, these numbers are coming up, and having a marginal tax bracket we talked about and an effective tax bracket, what are the differences? So a lot of people might be in a marginal, and all of a sudden, you know what? They're actually in a lesser tax bracket if they really calculate that and really actually sit down with someone to do that. But it's more than just, believe it or not, John, it's not the simple, here, put this in your portfolio and see you later, bye. It is so moving that you're seeing things happen so rapidly, even for someone like myself, and I'm looking at things almost daily, to be able to sit down with people and say, do you have a plan? No. Have you spoke with anybody? No. And I've seen that with millions of dollars. I mean, just recently, we have a client from Connecticut. I was like, wow, and you don't have and they had someone that you had to call the 800 number to talk to. So I'm thinking about myself. I said, and when they met me, again through a virtual workshop we did, it was amazing that the conversation I had, and the woman, after about 2 appointments over the phone, said, we've never met anyone like you, because you really look at it from the the big picture. You're not looking at just my 401k or my IRAs. You're looking at my life insurance. You're looking at how I'm going to pay for health insurance. You're looking at the distribution. You're looking at, do I have a will? I mean, you're not just pitching us a product, so to speak. And that's not what we're here for. We're here to make sure people have a strategy involved with what they want to do. And we don't know until we speak with somebody about that.
Don't think that your business is any different than any other business. I'm in the advertising business, and people say, you know what? They'll say to me, my daughter had marketing in college. Well, how old's your daughter now? 42. Oh, okay. So she had it maybe 20-some years ago.
Right.
You think things have changed by now? So
it's amazing to me.
That's what they go by.
Correct.
So it's no different.
And you have a mindset here because you have a midterms coming up here this Tuesday, which is, if you think about it, we have never talked about this like it has been talked about through all the stations from not only radio but TV and people in general. That again, what's going to happen in the next couple of days will really put our country in a different direction possibly. You're seeing oil prices. I mean, Chris comes in and says, we're looking at $4 again.
Yeah. Oh, yeah.
For gas. The average person, that takes a little dent out of them. You see food prices going up. So all these things we all know. The question is, do you have a game plan of action? Can I help that individual get over this situation? And it might be around for a while. This is not going away. So for taxes and inflation and then distribution and, do they have to work for the rest of their life kind of thing? Okay. Because it's longevity. People say, what? Will I outlive my money or my money will outlive me? So they're the questions, and one of the major questions I asked John, and it really has come up, I ask the person all the time that I'm speaking with, and an individual for that matter, it could be a couple or an individual, but, where did you come from? And what experiences did you have with money growing up? You'd be surprised what you hear.
Yeah.
Because they might have taken the same initiative that their parents embarked on them, that they themselves do the same thing. And it could be bad.
Yeah.
Or it could be good. So It depends on those type of questions that you ask. But again, getting back to what we're trying to accomplish is you got to have a plan of action. You can't go in this blindly. And we're, as he said last week, we are in a second inning of a 9-inning game. This is not over. The bear market's coming. You have these bear rallies you just saw this week. But again, you need to look through that. And you really need to have someone you're speaking to about inflation, taxes, distribution, healthcare issues, Medicare issues, long-term care issues. So these are a lot of the core elements that all of us, being a boomer or a Generation Xer, are going to be faced with over the next 15 or 20 years.
You know what they say? This is not your parents' economy anymore.
Correct.
Yeah.
I mean, you see it happening right now, John. I mean, it's not, So for us, looking at, I'll give you an example, and you're seeing it, and you're starting to see cracks in this. Mortgage rates. They're over 7 right now.
Oh, man.
So what's going to happen to housing? And the other thing is, I think people have looked at housing differently. They thought it was an investment. It's a place to live. People that have homes, primary homes, they look at that as their place to live and what have you. They don't look at it as an investment, and just because it goes up and down, to me, it's irrelevant. I have to live there. So if my house goes up $200,000 or goes down $200,000, I'm not moving.
Right.
Or I'm not selling out after it goes up 200. Right. Where am I going to go?
Yeah.
Because people say to me, well, Joe Yakovich, where you live, your property went up and all this money. What are you going to do? I said, I'm going to do nothing. I'm going to stay where I'm at. Where am I going to go?
You could pitch a tent,
Right. That's my point. I can pitch a tent. But when you hear that, and I go, no, that's not my game plan. My game plan is to stay in a place that I think is good. But you're now start to see that the cost to stay there called taxes. It's irrelevant if the property goes up or down. I still have to pay taxes. Even if I have paid my home off, let's assume it's completely paid off. If I miss my taxes or my property taxes, they lien my property.
Yes,
so I never really actually own the property.
Right. That's right.
Somebody else owns the property.
That's right.
And people need to be aware of that. And when you're going into planning for people, I take that into consideration. So it's just not, a one-trick pony mentality. You really need to have someone sit down with you. Truly, I don't care who you're working with, if you're working with our team or someone else's, or making sure that you're not an 800 number out there. And that's really important, I believe.
All right, we're coming up on a break, and that means it's the Heart of Your Money every Saturday, 8 till 9, WPG, Talk Radio 95.5, 609-407-1450. If you have a question or a thought for Joe Yakovich, feel free to call in. 609-407-1450 is the number. Joe Yakovich is here, the heart of your money, every Saturday, 8 till 9, WPG, Talk Radio 95.5. We come back with more Heart of Your Money after these words.
Are you wondering how to begin the process of getting your financial house in order? You can start with one simple step. Get your free copies of Joe Yakovich's series of books. Book 1 is The Heart of Your Money. Book 2 is titled Bulletproof Your Financial Plan. And Book 3 is called Wealth Beyond Taxes. You can have 1, 2, or all of the above by simply calling the radio show right now at 609-407-1450. During the week, you can contact Joe Yakovich's office at 856-751-1771. Either way, if you'd like to get the process started and get your financial house in order, getting Joe Yakovich's books is the right way to start. You can also find out more by checking out Joe's website, jmlfinancialgroup.com. That's jmlfinancialgroup.com. With more than 37 years as a financial expert, Joe can help you and your family achieve your financial goals. Joe Yakovich, JML Financial, jmlfinancialgroup.com.
Here on The Heart of Your Money, we know that many times you may have questions, but you might just be a bit bashful to come on the radio. No worries. Joe Yakovich comes to your rescue. If you'd like to schedule a brief phone conference with Joe, all you have to do is call Joe in his office at 856-751-1771. 856-751-1771. Joe will contact you and discuss any and all of your financial type questions. Or if you'd like to meet Joe in person, he'll do that as well. You see, Joe Yakovich does his best to make sure you have all your questions answered, and in a timely manner. That number again for Joe Yakovich, JML Financial, is 856-751-1771, and always online at jmlfinancialgroup.com.
Securities and investment advisory services offered through Brokers International Financial Services, LLC, member SIPC. JML Financial Group and Brokers International Financial Services, LLC are not affiliated companies.
It's a fall festival at BF Mazzio. All kinds of goodies, including delicious and fresh McIntosh apples, apple cider bread, pumpkin bread, and of course, all sizes of pumpkins. BF Mazzio, where there's always something special. Don't forget the finest fresh fruit and produce you'll find anywhere. And of course, a complete selection of prepared foods and baked goods second to none. BF Mazzio, 601 New Road in Northfield. Online at bfmazzio.com.
Back here on the Heart of Your Money, Joe Yakovich is available during the week, 856-751-1771. That's 856-751-1771. And his website, jmlfinancialgroup.com, jmlfinancialgroup.com, how you can get him on the web. It is the Heart of Your Money right now here on Talk Radio 90... WPG. I was close.
Well, he's got a couple of them.
Didn't do it. WPG, Talk Radio 95.5 FM. I'm John DeMasi with Joe Yakovich. 609-407-1450, our number here in the studio. You want to talk about 401ks, and I guess there are many challenges with handling your own 401k. What are they, Joe?
Absolutely. Well, first of all, one of the things we need to understand right up front is you need to control your own destiny in some of these strategies that we're talking about. And again, planning for them. The biggest challenges with the current 401k, you have very much limited investment choices. You're not able to, pick and choose anything that you want to invest in. So you're limited in terms of where you can actually place your money. And often plan advisors are prohibited or limited to giving specific advice. So if you do call the 800 number, you're going to get limited information from that individual to give you advice on other than, going to our company website and check out what's available to you. So that's number one. And too many of us, we manage portfolios in a 401k, I see, that have target funds. And now, these target funds are not designed for everyone. To me,
what is a target fund?
A target fund is some of the problems I'm going to talk about. They're basically set up to default and match the average person's risk tolerance. So, for instance, if you and I are going to retire at 2025, that target fund is set up where you'll have more equity or less equity versus bonds. So as you get closer to that 2025 number, the portfolio starts to shift into a more of a conservative portfolio when it comes to the bonds or fixed portions of that.
Well, that makes sense. I mean,
makes sense.
Yeah,
but maybe it's not good for you versus good for me, number one. And because of that, when you have interest rates going up, you have price of bonds going down.
Yeah.
So you can actually lose, which have happened just now, with target funds that this side of the portfolio that has bonds on it, the real safest part, is losing 30-40%. So now you have a real issue. You have a target fund that's losing money, which is supposed to make money in terms of when you retire, but the individual that you're picking those funds, to me, I call it the lazy man's fund. You really don't do anything. And for us, we customize the plan with the individual. We have 401ks that we manage, and part of that is, to me, but not everyone, you got to have some diversification. You got to have some in large cap, small cap, value, growth, etc. And you have a blanket of those vehicles across the board. And as things happen, because everyone has a different risk tolerance and what they're trying to accomplish. So again, it's one of those things, John, in 401ks, you have to understand that there's a lot of danger in making the assumption that everyone has the same risk tolerance and has exactly the same financial goals and objectives. And that's not the case a lot of times.
Okay, so how do you not have a lazy man's portfolio, and how do you diversify within your portfolio to make sure that things don't happen that you were just talking about?
Well, the more, it's just more than the large caps or small caps or value or international or global. If you think about it, we need to get away from the talking heads that we hear on TV. I mean, it's amazing. Everyone believes and they run after the newest and grooviest things that's out there. We have probably the largest bankruptcies that happen in history, and unfortunately, people follow the headlines and the talking head. So we really need to sit down with someone to design a plan of action. What's important to you? How far out are we looking at to retire? Are you retiring today? Or are you retiring, in 5 years from now? To really design something, set and not forget it, you need to design something that's customized. Looking at history and looking at what's happening, and we use weight statistics on how the government is spending and printing, you're seeing these things happen and affecting the portfolios dramatically. So you really need to have someone to be able to do that for you. The other thing, John, people need and really should understand, and with this couple that I'm dealing with now in Connecticut, I said to them, you need to have some type of hybrid retirement plan. They said, what do you mean? I said, just when you stop working, you should do some other type of maybe part-time work. And these folks are really active. I mean, they do dives, scuba dives. They're out there, doing deep water dives almost, I would think.
They diving for treasures?
They're diving for everything. It's amazing. I'm listening to them. They're in their 60s, and they had like 200 dives. I'm like, wow, that's pretty bizarre. I didn't even thought about that, how many times they do this. That's a nice little hobby, but they still have to do something with their own head. They have to get back and do something. And they both agreed. One was 72 and one was in her 60s. I said, do something that pertains to keeping yourself active. You don't have to do it 5 days a week, but do it a couple days a week just to keep yourself in the game, talking to young people or doing what you have done for, 30 or 40 years and been great at it. So we always, suggest and recommend people do not just stop working and sit and watch TV all day.
Yeah.
That's the problem.
Do you ever watch daytime television?
Right.
You ever been sick and you got to
Right.
watch daytime television? You will go crazy after about 2 days.
I'm thinking about the shoulder right now. I'm going to do a couple of daytime television sits. But.
Yeah. Talk about that people followed the talking heads, because I know Kramer jumps off the table.
Right.
And he's got high ratings. So,
Right.
But talk about some of the companies that we used to know and they lost billions.
Right.
And
these are the companies that have exactly. I'll give you a couple of them, John. It's funny you mention that. It's some of the large cap funds, for instance, WorldCom. It lost $103 billion. Enron lost $65 billion. Washington Mutual lost $327 million. Lehman Brothers lost $591 billion, just to name a few. So when you have somebody screaming and yelling about different companies, remember, it's almost like, if we're going to be really good at this, truly, whatever Pecosi, our speaker, and their family, Pelosi, whatever Pelosi does, that's what we should do. It seems like it's because she has the inside track on some of these companies. If you think about it, and you have to say to yourself, maybe that's the way to go about it. Maybe they're the ones that get information before the rest of us do. But we need to be really in tune with people like that, as much as we like or don't like. But what's happening is that we're looking at portfolios differently, and we should not, because of the talking heads, and we've gotten really hurt by it, and it looks to continue to happen. So we really need to sit down with someone, the game plan, and look at, like we talked about, putting a plan together, not having a plan versus having it. I really feel sorry, John, I really do, for the people that don't plan. I really do, because it's impossible. Now, I've been doing this for a long time, and Van also has been doing it for a long time. It's impossible for the individual with no plan or no help to know all the things that take place. It really is.
You can't. No.
It's impossible because things are changing. When even the other day when I was finish up with a client at my home, and we were finishing up and we were talking, I said, you're going to be needing some type of Medicare. She goes, man, I got 1,000 people have been calling me every week. I'm overwhelmed. I said, forget that. I have a person on my team. That's all they do for us and my clients is Medicare planning. She said, you're kidding me. I said, no, that's part of my team, because I realized early on that I was going to need someone that specializes in that particular area.
Yeah.
And she's great at it. She's on our show, but she does a bang-up job of understanding all the little loops and things that take place with Medicare. I know enough about it to, license in it, but, because of the changes that are taking place rapidly, you need to have a person on your team to do that. Are they giving you the right advice predicated on making a commission, or are they giving the right advice predicated on doing the right thing by you? So that's part of our philosophy. And it's sad, John, that we don't have that across the board, because when you talk to people that have a lot of money, they've been doing it on their own. And I go, how did you, and it's been pretty easy for the last 14 or 15 years because of the suppression of interest rates and what has been happening in the market. But those games are over.
You have a stat, and we're coming up on a break. You'll go over this after the break. You have a stat that shows that with an advisor, you gain much more than you would doing it yourself?
Absolutely.
Okay, so
Prove it.
We'll pick that up in just a moment. It's The Heart of Your Money every Saturday, 8 till 9, WPG, Talk Radio 95.5. I'm John DeMasi with the one and only Joe Yakovich. JML Financial, jmlfinancialgroup.com is his website. 609-407-1450 is our number, 609-407-1450. We come back with more Heart of Your Money after these words.
Here on the Heart of Your Money, we know that many times you may have questions, but you might just be a bit bashful to come on the radio. No worries. Joe Yakovich comes to your rescue. If you'd like to schedule a brief phone conference with Joe, all you have to do is call Joe in his office at 856-751-1771. 856-751-1771. Joe will contact you and discuss any and all of your financial type questions. Or if you'd like to meet Joe in person, he'll do that as well. You see, Joe Yakovich does his best to make sure you have all your questions answered, and in a timely manner. That number again for Joe Yakovich, JML Financial, is 856-751-1771, and always online at jmlfinancialgroup.com.
Securities and investment advisory services offered through Brokers International Financial Services, LLC, member SIPC. JML Financial Group and Brokers International Financial Services, LLC are not affiliated companies.
In these unusual economic times, do you wonder what to do with your money? If you have questions about retirement planning, IRAs, 401ks, tax planning, or any other type question, then listen to The Heart of Your Money, heard every Saturday from 8 a.m. to 9 a.m. here on WPG, Talk Radio 95.5 FM, featuring noted author and financial expert Joe Yakovich. The Heart of Your Money will focus on you, your family, and the best ways for you to navigate your financial portfolio. That's every Saturday, 8 a.m. to 9 a.m., The Heart of Your Money with Joe Yakovich, here on WPG, Talk Radio 95.5 FM, South Jersey's talk station.
And we're back here on The Heart of Your Money. If you would like to reach Joe Yakovich during the week, it is 856-751-1771. That's his number, 856-751-1771. And his website, jmlfinancialgroup.com. jmlfinancialgroup.com is the website. Check that out as well. It's The Heart of Your Money every Saturday, 8 till 9, WPG, Talk Radio 95.5, 609-407-1450, 609-407-1450. If you have a question for Joe or you want to run by your financial situation, feel free to do that. We were talking about doing you get a better return with a financial advisor.
Yep.
But can you talk about what you do, how your portfolios compare to the cookie cutter things that people are getting, and how it differs from that?
That's a good question, John. That's a great question, actually. And part of what we do, among many other things, is that we use portfolios that are designed, and we look at stop losses, meaning that as the market trails up or down, we're able to pretty much, and not all, but a lot of times be in cash. Right now we're in cash, and our returns are, and I'm going to share that with the audience, what has happened over the last 7-8 years in the market. The other thing I wanted to add before I get to that is that, I'm sitting down with people all the time, and when I hear them speak with me, especially people who have money, and have maybe the spouse is either divorced or passed, and they're individuals. And I say to them, I said, well, do you have insurance? And they said, well, I used to have it, now I don't have it anymore. I said, well, let me ask you a question. In the event of your demise, how is these properties and such are going to go to your children? And they looked at me and like, what do you mean? I said, well, they're not you. You've been doing your, collecting the rent and doing all this other maintenance stuff, and they live in another state. How is that going to work? And would they as soon as something happens to you, will they end up selling all their properties off so they can, recapture all that money as an inheritance? I go, does that make sense to do it that way? And they said, well, why not? I said, well, think about it. If something happened to you and those properties have to be sold at a yard sale, and if you've ever been to a yard sale, what are you trying to do? I'm trying to get the best price, and the person that's buying the stuff is trying to, shop me as much as possible. So the same situation applies for that individual. Would insurance cover that, that cost or that time frame that they can not worry about, selling off their real estate property or whatever they had to sell off and be taxed on it? And that's another conversation that people need to be addressing. Do they have the right type of vehicles for themselves, having it planned out perfectly for them? And that's kind of what we do. So flipping that coin, going over to what we were talking about, it's no different than the portfolios. When you're looking at a portfolio, what we try to do is design portfolios with emotionless and mathematical driven certainties. That's where we're looking at. Because again, remember I said earlier, the portfolios that were designed 20 or 30 years ago and are still being applied today don't work because we can make trades just on our phone.
Yeah.
Or years ago when I got into business, I'd have to call the desk in New York and make those trades. So the game has changed dramatically. People need to be aware of that. It's happening way too fast for them to ever, try to recover from a loss or benefit from a gain. So again, I'll give you some numbers. For example, in 2016, now this is the portfolio that we use, John, and we use it quite a bit purposely because of the situations. In 2016, we were up 11.5%, 2017, 29%. And I have all the numbers here designed for us to talk about that today. 2018, we were down 11%. 2019 up 14, 2020 up 39.
Wow.
2021 up 38. But remember, just looking at 2020 we did 39.8%. Okay, in a portfolio.
Average
investor did 6%, 6 to 7%.
Whoa, that's a big difference.
Absolutely. And why? Because what we do, we protect people's money when the market goes down. That doesn't happen with traditional mutual funds, target funds, any of the things that they have in their 401k, any of these things. So these are the things that we do really good and for our clients. So we are able to, and it's not a timing factor. It's a way that the algorithms of what's happened in the portfolio to determine. Not all companies offer that. There's only a few. And it's a proprietary situation, stop loss philosophy that we have and has been working for the last 20 plus years. And that's relatively new in the marketplace. But not everyone are going to stop their traditional, 401k and saying, "Oh, I'm fine here. I'm going to sit and hold." Well, they've done that for a long time, and now they're seeing a disaster. They did see everybody was so happy when the first market was up the last 10 or so years, but now they're like, "I can't believe I just lost 40 or 50." Yeah, but you didn't talk about this. You were making. Now the question becomes now, how long will it take you to make the loss back up? How many years will that take?
Yeah.
And when they start to calculate that, it might be 10 to 15 years. So if you get somebody that's 65 years old, you're going, yeah, you could break even by the time you're 80. I mean, that doesn't make sense.
No, it doesn't.
So it's something where we need to really have a game plan and action for people to really take to heart, to understand it's not only money, but it's a lot of different strategies that we present to people. It's not just, okay, we're going to look at that. But the other thing is they don't understand the tax situation. Because remember, the fact that a lot of people have not paid taxes after the standard deductions, and that also has increased. So now you have a chunk of people, millions of people, that have not paid taxes. Well, let me ask you, where are they getting the money to take care of the rest of us? Because we're voting power. Those people are voting power.
Yeah.
So understandably, we need to have the people that have money, because they have big targets on their back. They're coming for you.
Yes,
they're coming.
Are.
I mean, I don't think they realize that. And they're like
87,000 IRS agents.
Correct. And it's deferral. And now it's time to wake up and say, "Oh, I'm have to pay how much?" And they're griping about it, but they haven't paid a dime of tax for the last 20 years. 401k is a perfect example. IRA is a perfect example. That's why, because the market fell off, John, dramatically, could not be a better time to make that conversion into the Roth conversion. There's no income verification. It's just you can make as much as you want.
I'm just looking at this. 2020, your portfolios gained 39.8, 40%.
Correct.
As opposed to the average investor earned 6.7.
Correct.
That is a big
major difference. That's the difference of our portfolio. So when we do comparisons for people side by side, and we can show them history and what has happened up to now, And obviously, the future is not dictating what we can do and not do. But I want to show them there's a track record. It's one of the pieces of everything else. That also, for me, when the time comes to say, okay, we have all this money, how do we move that money into your own account from a 401k to an IRA to potentially a Roth IRA? And now, another little caveat, how do I make that money either grow or give you an income for the rest of your life where you cannot outlive it? And that's another conversation to have. So not all of us in this business are just looking at accumulation. We are looking at accumulation and also distribution, which is, to me, it is the time to do this, especially because of that transition from people coming out of retirement, the boomers, going into a full-blown retirement and working a part-time and still having an income that they feel good about themselves and not be stressed out, because stress is a major factor in this equation.
Talk about a self-directed brokerage account. What is that?
Yeah. Self-directed, this is a window inside of a company's 401k. Not all companies offer it, but you're seeing more and more. And this is available from a 401k or 403b. It's a third-party management. Nothing changes, and all that happens is the control of the financial money inside their 401k. Now we can peel that back and have unlimited investment choices that a third party now can offer. So we come in and not disturb their 401k. We just replace the money with our type of portfolio, which shared with you. The custodian must approve it. And again, like I said, not all companies offer this, but you should definitely inquire, if you're listening, about present 401k custodians. Will they allow you to not change anything, just replace your portfolio with what we just finished speaking about, as opposed to the cookie cutter, buy a bunch of these funds, target funds, and sit and hold and don't do anything.
Do you recommend this?
I do it all. I have it myself. I do it all the time. But again, not all the companies that I come in contact with, the custodians allow us to do that. But the ones that have, it's a great opportunity for people to really have good, really superior money managers, which normally they would not have. Remember, most of the 401ks and 403bs are pretty much cookie cutter, funds in them and target funds in them and mutual and large cap and some, and no one's doing anything for them. There's no rebalancing possibly. I mean, we rebalance quite a bit because of the market. So again, these type of self-directed brokerage accounts allows us to pretty much parachute into a company, offer that individual a broad base of different vehicles to use inside, like we talked about, because of the self-direct allowance to do that, but then be able to be in cash where otherwise you would probably sitting on a lot of funds that are losing and losing and losing. And how do you stop the bleeding? Because people are recognizing, they're going back to the old school. I haven't opened my envelope from my account for the last 3 months. Why? And you've heard that. I don't have to tell you. So that's a typical answer I get.
Yeah.
I haven't even opened it up. I'm afraid. So. Okay,
we're coming up on our final break of the morning. It is the Heart of Your Money every Saturday, 8 till 9, WPG Talk Radio 95.5 FM. Also heard on 1450 AM and online at WPGTalkRadio.com. 609-407-1450. Couple of minutes left. If you have a question for Joe Yakovich, 609-407-1450. I'm John DeMasi with Joe Yakovich. We return with final thoughts on today's Heart of Your Money after these words.
Here on the Heart of Your Money, we know that many times you may have questions, but you might just be a bit bashful to come on the radio. No worries. Joe Yakovich comes to your rescue. If you'd like to schedule a brief phone conference with Joe, all you have to do is call Joe in his office at 856-751-1771. 856-751-1771. Joe will contact you and discuss any and all of your financial type questions. Or if you'd like to meet Joe in person, he'll do that as well. You see, Joe Yakovich does his best to make sure you have all your questions answered, and in a timely manner. That number again for Joe Yakovich, JML Financial, is 856-751-1771, and always online at jmlfinancialgroup.com.
Securities and investment advisory services offered through Brokers International Financial Services, LLC, member SIPC. JML Financial Group and Brokers International Financial Services, LLC are not affiliated companies.
Are you wondering how to begin the process of getting your financial house in order? You can start with one simple step. Get your free copies of Joe Yakovich's series of books. Book 1 is The Heart of Your Money. Book 2 is titled Bulletproof Your Financial Plan. And Book 3 is called Wealth Beyond Taxes. You can have 1, 2, or all of the above by simply calling the radio show right now at 609-407-1450. During the week, you can contact Joe Yakovich's office at 856-751-1771. Either way, if you'd like to get the process started and get your financial house in order, getting Joe Yakovich's books is the right way to start. You can also find out more by checking out Joe's website, jmlfinancialgroup.com. That's jmlfinancialgroup.com. With more than 37 years as a financial expert, Joe can help you and your family achieve your financial goals. Joe Yakovich, JML Financial, jmlfinancialgroup.com.
And we are back here on The Heart of Your Money. Joe Yakovich is available during the week, 856-751-1771. In fact, he's available after 9 o'clock, so feel free to call him. 856-751-1771 is his number. And the website, jmlfinancialgroup.com. jmlfinancialgroup.com is his website. And don't forget, Joe is doing a virtual workshop on November 10th and November 15th. It's on required minimum distribution. And all you have to do is go to the website, jmlfinancialgroup.com, and you sign up. That's it.
That's exactly it.
That's it. So,
but that's another, just the thing we were talking about. It's another piece.
Another piece that you could kind of get started with, or just get the information
Correct.
To get started with.
Exactly.
So, which leads me, and by the way, 609-407-1450 is the number here, which leads me to the question, when do you start this process of hooking into your system, and when is the best time to do it?
Well, the best time, obviously, the earlier the better. I mean, I like to get people thinking about this in their 40s, because it's, like you said earlier, this is not your parents' retirement plan. Remember, the old days of pension plans are done. So people need to start to factor those things in much quicker, because of inflation, taxes, and so forth, and all the volatility we're faced with. So again, so important, and you can see that so many things are changing. Even what we just talked about, the RMD, the Medicare, the longevity, the fact that, how long will you need the money? And we try to get people really thinking about this, John, 5 years before they start to think about retirement, because it's so critical, the 5 years before and the 5 years after. It could be devastation. I mean, think about it. You've seen, if you were retiring in 2008, what would you do?
Yeah.
You're in trouble.
Yeah.
And you can understand, if you would have done the same thing just recently, what would you have done?
Yeah.
So you really need a game plan in action, having somebody proactively sit with you to ask you these type of questions. Are you going to work? When are you going to take an RMD? And more importantly, I mean, it doesn't seem like a big deal, but it is. When will you start to withdraw Social Security? What is the right time to take it? Is there a strategy within a strategy to take Social Security later versus earlier? We're doing one right now. When I said you're 62, I'd rather you wait till 67. The benefit was about, give or take, 900 and change difference.
Wow.
More.
Wow.
So I said to the individual, I said, why would you want to take it at 62 and lose that 900? Why can't I take some of your assets? And it's a perfect example. Let's take some of your other assets and use those assets for, from the next 5 years. And then when 5 years go by, you'll then click in and take your Social Security at that time. Besides the bump up in cost of living, you'll get that higher amount. And they looked at me and we ran the numbers. And I said, it makes sense for what and we never. And they themselves said, And smart people, we never even thought about that. So these are the type of conversations that we have with our clients, John, all the time about what-if scenarios. And they have to get that on the table. We talked about a little bit like that last week about, having that communication with your spouse. And if you do have that, it could be a different story because some couples differ on money. And if they get divorced, separated, any of those things that happen, you have to make adjustments accordingly. So it's never a kind of a standstill approach to what we do. It's always being somewhat massaged because we do not know what the numbers need to be for those individuals to have an income for the rest of their life, and we factoring everything. And that takes a lot of work. That takes somebody knowledgeable to be able to have that conversation with that individual and sit down with them and make them aware of those things.
Biggest mistake people make? Where do you want to start?
Whoa, that's a whole show in itself.
Yes.
I guess the biggest mistake is they don't save enough early enough. I mean, if you think about it.
Yeah.
If you're early in the game, you could take the risks. But when you get to a point, you better have a game plan to look at, longevity, because I don't want somebody to go back to work at 75 years old.
Yeah.
If I can help you. If I can make that happen.
Could you say it? You can be a greeter at Walmart, which
I would.
You probably
one
would.
One of my favorite jobs. But again, going back to what we said, you need to have somebody you're speaking with to be able to understand the tough questions that you have to be asked. I mean, that really comes down to it, John.
Okay, you want to
say something? Well, John, as I closed, we've been doing this, it's so important for people to meet people like me. It doesn't have to be me, but someone has to be able to hold their hands 5 years before, 5 years after, and have access of not only that information, but what strategy makes the most amount of sense, and always being able to, tweak that plan every single year because things are changing at a rapid pace. And that's what we do. We have a team. We have a family approach besides my wife and my son. We have people we work with all the time, and I appreciate that like kind of a home cook approach of helping people get through this. I mean, this is so much uncertainty that I've never seen before. So if I'm seeing it as a professional, what do you think the rest of the world must see?
And that puts the wraps on another edition of The Heart of Your Money. Don't forget Joe Yakovich, available during the week, 856-751-1771, and his website, jmlfinancialgroup.com. For Joe Yakovich, I'm John DeMasi. Thanks for listening. Talk to you next week. The Heart of Your Money, Saturday, 8 till 9, right here, WPG Talk Radio 95.5.
Joe Yakovich is a registered representative with Brokers International Financial Services, LLC, member SIPC. Opinions expressed on this program do not necessarily reflect those of Brokers Financial or Joe Yakovich. The topics discussed and opinions given are not intended to address the specific needs of any listener. JML Financial Group does not offer legal or tax advice. Listeners are encouraged to discuss their financial needs with the appropriate professional regarding your individual circumstance. Fixed annuities are long-term insurance contracts, and there is a surrender charge imposed generally during the first 5 to 7 years that you own the annuity contract. Withdrawals prior to age 59.5 may result in a 10% IRS tax penalty, in addition to any ordinary income tax. Any guarantees of the annuity are backed by the financial strength of the underlying insurance company. Indexed annuities are insurance contracts that, depending on the contract, may offer a guaranteed annual interest rate and some participation growth, if any, of a stock market index. Such contracts have substantial variation in terms, costs of guarantees, and features that may cap participation or returns in significant ways. Any guarantees offered are backed by the financial strength of the insurance company. Surrender charges apply if not held to the end of the term. Withdrawals are taxed as ordinary income and, if taken prior to 59.5, a 10% federal tax penalty. Investors are cautioned to carefully review an indexed annuity for its features, costs, risks, and how the variables are calculated. Please consider the investment objectives, risks, charges, and expenses carefully before investing in variable annuities. The prospectus, which contains this and other information about the variable annuity contract and the underlying investment options, can be obtained from the insurance company or your financial professional. Be sure to read the prospectus carefully before deciding whether to invest. The investment return and principal value of the variable annuity investment options are not guaranteed. Variable annuity subaccounts fluctuate with changes in market conditions. The principal may be worth more or less than the original amount invested when the annuity is surrendered.